Hello, I'm Jim Adams. Today I want to share with you how I avoid losses, how I actually manage trades that are deep in the money. And I'm going to need your help with one of my current trades, ARKK. So please stay tuned. I think you're going to really enjoy what I have for you. Welcome to the Easy Investing Income YouTube channel. This is a channel that I set up primarily to teach others safe option strategies. I've been selling options for over 15 months now and probably have done over 250 trades. And in that time period, I've learned kind of the right way to do things and the wrong way to do things. And that's what I really want to share with others through this channel. But before we get started in today's video, I do want to mention that selling options does have some risks, so be sure you do your own due diligence and understand what you're getting into. So that being said, in today's video, I'm going to actually talk about one of my stocks, ARKK. It went through a real major downturn recently. It's gone down almost 30%. I think it had a high in the last 3 months of like 125, and recently got down to as low as 90, 89. And I find myself currently deep in the money. And what I want to share with people is what I'm going to do to actually manage this trade, how I'm going to manage this position, and how I typically deal with this. This isn't the first time I've dealt with something deep in the money, either on the put side or the call side. With this situation, it's in the put side. So my covered calls at 106, and the current price of ARKK is, I think, like 99, 98, something along those lines. We'll jump in, and I'm actually going to show you the worksheet. So what I would like you guys to do is, share with me what you think. If you think, when I show you the different options that I have or choices I have with what I can do with my current contract, let me know what you think. Let me know if you think, I should go one direction, maybe close it and take the loss, or should I roll it? So I encourage you to add a comment below and, let me know what you think. So let's go ahead and jump into my spreadsheet. As always, I love to set up spreadsheets. So let me show you what I've done. Let me move this out of the way. So here I have ARKK, and my strike price is 106. The current price again is 99. That was just a few minutes ago. We'll look at the market in a minute to see where it stands. And then what I've done here is it shows the market value. So this is the cost, is what I paid for it. So, or not what I paid for, but the premium I got for selling the contract. So I made $105. Right now, if I was to sell it, I would have a loss of 540 on it, which would be a total loss of 440. So closing it is definitely one of the options. And that's a play on words. I keep saying options, but I meant one of the choices. So before I jump in and show you the different choices that I have, I do want to mention that, I've done some research with ARKK, and I do like a lot of their investments. I'm not a Kathy Woods hater. I do have some investment advisors that I listen to. One is Invest Talk, and Justin is really against them. He doesn't like Kathy Woods, and he thinks she's too optimistic. But I did dive in. I did look at a lot of what they're invested in. Of course, they have Tesla, and I like Tesla. I've always been a proponent of Tesla. Part of the reason I decided to invest in ARKK is I don't really want to own some of these stocks myself. So that's why the idea of a ETF really was intriguing to me. So they've got Tesla, they've got Roku. I love Roku. I currently have, this is a Roku TV right in front of me that I'm looking at. The TV downstairs, I've got another Roku that's going to be a Christmas gift. So I've used Roku quite a bit, and it's a company I'm interested in. Of course, I love Zoom. I use Zoom a lot too. And Teledoc. I just literally got a notice in the mail from my insurance company that they are using Teledoc. So I do think Kathy Woods likes to talk about how she thinks within 2 or 3 years, a lot of these companies will be making really good income. A lot of them are not making income, even though they have really high growth. And I do think there is some truth to that. So there's a part of me that kind of wants to keep trying to own ARKK, and I do own it in some of my accounts, but for the purpose of this video, I'm trying to decide what I should do with my position. And so my choice is here. And so I'm kind of mixed. I'm not so against it that I definitely want to take the loss. I may also want to roll it. So let's go through the different choices or options. So here's the options for managing the position. So the first one is I can close it, and that's what I showed you before. I would end up taking a $400 loss, which in this account I've been averaging 500 a month, so that's like losing a whole month in return, but I can probably make it up in future months. And you know so it's not that big a deal. If I need to take a loss, I will. Now I can roll it for a monthly premium. So in my mind is roll it within 90 days. And when I roll, what you're doing is you're closing your current position, so you're taking this loss, but you can get more premium, for a position down the road. So you're buying yourself more time for the stock to move. So that's what's really key, is where's the stock going to, not the stock or the ETF, where's the strike or the price going to go? Is it going to continue to go down? Could it go down to 60, 70, or could it go back up to over 100? And I've heard arguments for both. I've heard people say it'll probably go up into the low hundreds again, and others that say, well, it'll probably go down to 70. So the next choice is wait until the day before expiration, and that's mainly because it's still a little over a week. It would expire a week from tomorrow, and I've written there theta and risk. The risk is it could go down in that time period, and I could take a bigger loss. Now, since I bought the outer arm, and I did a vertical put credit spread versus just a cash secured put, it limits my loss, and I'll show you that when I show you, what it looks like at the current account. So that's another option. I can wait, and if I when it earlier this week, or I think it was the end of last week, it went down to 90. If I had taken the loss then, I think it would have been closer to 8 or 900, maybe $700, $800, $900. So waiting does make a difference. Being patient, letting the stock maybe come back, especially if you have faith in the stock. The next one is to roll out for a bigger price adjustment for a little bit longer. And here I'm showing that I could earn 70. So I'll show you below that I actually did a little bit of research on different roles and into certain points in the future. So I'll talk about that in a minute. So one of the ones I looked at would earn about $70 with rolling it, and this shorter term is $50. And we'll look at these. We'll see down here. You can see some different choices with rolling, and then I could let it be assigned. And then sell the further output. Now, assignment for this could end up with a margin call, or I might have to sell one of my other securities to cover it, because it would be $10,600. The strike price is, it's 106. So you multiply that by 100, so it'd be $10,600 that I would need to come up with it, and I could probably make a couple $100 on the outer arm. But again, it would kind of mess with my account, and I really don't want to have to do something along the lines of a margin call or shuffle that account around. So I definitely want to make a decision before probably Wednesday. I'd like to trade with 2 days away from expiration. I don't typically ever trade on expiration. It's kind of one of my strategy. One of the main guidelines of my strategies is I don't trade on expiration days. At least, I don't try to close on an expiration date. Now, if I'm opening something new into the future, I might sell something, but again, I typically aren't going to close on expiration. The other option is I can do assignment and then initiate the outer arm. And again, that would also require a margin call, and that, what I'm meaning is, let assignment occur on both sides, and I would think that would be the worst choice. So let's look. This is where I looked at what was available if I did some rolling. So I could make $55 if I rolled it to 102. So again, strike price. But I would have, in every one of these cases, the only way I could do it was widen that spread. So it would be 102 and 82. And with the amount of cash or margin I have left, I'd have to keep it within 20. I think it's 27 that I have left in that specific account. Or I could roll it to 218 and I could do 101 and 80. Um, so that's a little bit less and it's a little longer. So typically, but it is a dollar, almost $2 lower. So, and I believe it's around 99. Now I could go 6 months and I could roll it to 99 and 80 and that would bring me in $70. So that's something I probably would seriously consider, mainly because it would give me 6 months and there's a good chance that some of these growth companies, from when I was looking at them in more depth, it looked like they could potentially, by second quarter next year, a few of the companies could potentially be making some income by that time, and that could have a big impact. And maybe the small companies will come back into favor and grow or go up quite a bit. Part of the reason it's come down is because there's been a move away from small companies and high growth small companies. So, and that may change. You just never know. Now I could go way out to 120.23, which is over a year. I could roll it to 90.96, which is quite a bit lower, and the outer arm would be 70.96. And I've done that before too. I've done that in my brokerage where I had more cash to play with. So that's another option that I could do. And then last choice, which is got the least amount of money, is I could also do a year out, which again is a leap, but I could do it at 85.96 with I think that's a 65 outer arm. And so in a sense, if I really think it's going to go down, then that's one way to deal with it. And if it actually goes up, then the value of the contracts, I'll end up getting a profit, and I could close that early. And I've also had those situations where I've closed them early. So that's kind of a look at it. So let me jump into the actual my account so I can show you what it looks like. So let me make this a little smaller. And these are some of my other positions. So you can see this is my Roth retirement account. And I think, yeah, Big is out of the money. Cisco's out of the money, I believe, yeah. BMY is out of the money. I'm just going through these. Actually, it's barely in the money. So pretty much all of these are out of the money or barely in the money. Now I do have AT&T and Ford, and those are leaps, so I'm not really worried about those at this point. IGH, these covered calls, they're also out of the money now too. This one's really close to the money, so they're both very, very close to the money, but they would be relatively easy to roll. XLE Energy Select Sector is also out of the money. So ARK is really the only one that's of concern in this account. And you can see here that, here's the short and here's the outer arm. And you can see it's changed a little bit since last time I looked at it. So here's the market value for the short, 735. So you would subtract 182 from 735. And that's what the market value would be. And that's the beauty, and that's why it's a little less risk if you can buy one of those outer arms instead of doing a full-blown cash secured put. So if I only had the cash secured put and only had this contract, then I would have to pay $735 to close it. Since I've got this outer arm, then I can close it, and it saves me 182, which minimizes the amount of loss that you would take. And what I found is if this continues to go down, right now it's 99.63, say it went down to 90, this may go up to 1100, and this may be 400. So it doesn't get too way out of hand, if you get my drift. And then that's another reason why you don't typically let it go through assignment. You always want to close these or roll these before you get to the expiration. You don't want In most cases, you want to avoid assignment unless you really want to own the stock. Then just let it be assigned. One good example is one stock I really like is LEG, Liggett and Platt, and if I can get it at 40, I'm going to let it just be assigned, and it's at 42.485. So, and then let me show you to. Let me move this down a little bit. Let's come over here. Here you can actually see ARK, and you can see if you let's do it at a year, and you can really see how well. Let's do it at 5 years, so you can see how I actually had to roll all the way up, and then I rolled down, and now I'm having to roll down again. But this has been a pretty substantial downturn in this period. I've been able to do a bunch of contracts, so my inclination is it may go back up, but again, I've heard a lot of people saying it may go below this value. So my preference is I'm kind of leaning to rolling. If we go back to the spreadsheet, rolling to like this one down here, one of these two, rolling to either January or February. I typically don't want to go too far out because you know it doesn't make sense to take. I'll probably go with this. If I can take $55 and then have the chance to work it again, but again with the wider spread, it may be harder to turn a profit with it. But it all relates to where the stock goes. If it goes up, then I'll be doing better. If it continues to go down, then I'm just delaying a bigger loss. So you can see my little dilemma here. So right now I'm probably leaning towards rolling to 120, 122. I can earn $55, and hopefully ARK comes back up. But like I mentioned in the beginning of the video, I'd love to hear what you guys think. What would you do in this instance? Would you just close it and take the loss, or would you roll it? Or what you think. Any comments down below would be wonderful. I'd love to hear from people. And as always, please hit that like button, subscribe. I've got more videos coming. I believe next week I'll be sharing my trades from November. I actually had a really good month. And I also have my Patreon memberships. I've got what I call the Investor Club and the Traders Club. The Investor Club, every time I do a trade, I actually go into Patreon and I post what that trade was. So you have access to my trades pretty much probably a minute or two after I make them. On my Traders Club, which it includes Discord, and it also includes, we have a Zoom meeting every Tuesday, and where we discuss these things and we discuss these kind of decisions. So I encourage you to take a look if you're interested. And as always, happy investing, and I hope you the best. Thank you.